Good day, everyone. Welcome back to another episode of Wilson Weekly. We've got here Doc Wilson again with some fantastic data, mate. What have we got planned for today, mate?
Well, we're in February, if you hadn't noticed. So I guess we've sort of moved past the Happy New Year phase. Most people are back at work, and the housing market's back at work too. We've got this week really our first substantial data sets for the year. So we can really start talking about what's happening in the housing market. We're going to look at the latest home price data, and that's for January, of course. Hot off the press, we've got the My Housing Market report for January for both houses and units. So we'll have a look at that, how that's performed. No surprise that generally the January data is a little soft because, of course, most of us are on holidays and there's not a lot of activity happening in the housing market. Although our data does adjust for seasonal effects, you still obviously have a much higher proportion of lower priced properties. In other words, a lower proportion of higher priced properties, fewer buyers, fewer sellers, and that puts downward pressure on prices. But nonetheless, we can still compare it to where we were a year ago, and that sort of offsets the seasonal effects. So we'll have a look at that. Today, we'll also look at the latest building approval data, which we do look at because Australia, of course, notoriously, well, not notoriously, but along with many other developed countries, has a chronic shortage of housing. And that, of course, puts upward pressure on prices and rents. And we've been looking at this quite closely for a number of years, really, because that's how long we've been underbuilding. The government's very interested in this, of course, because they're keen to at least see some downward pressure on what's recently been skyrocketing rents. And of course, more houses means, hopefully we can spread the joy of home ownership around a little bit more. But we have that latest data, an improvement over January. The data tends to bounce up and down a lot, so we do look at the trends, and the trend for building approval has just started now to pick up. So the longer term trends for new home approvals is starting to lift at last. It's coming from a very low base. So we'll have a look at how that's panning out. But of course, also this week, for the first time this year, we have the latest auction market report, auction market results. Of course, we look very closely at auction market results on a week-by-week basis because they are a very good forward indicator of what's happening generally in housing markets, as we know. So from week to week, we look at the housing market, we look at auction markets, we look at clearance rates and listing volumes, and that tells us, sort of what's happening dynamically in housing markets. So we have the first, reliable results for the year for the auction market. So we'll have a look at that. So plenty of stuff. We're rolling now into 2025. Of course, excitement is that we've got an imminent Reserve Bank meeting. By imminent, I mean next week or so, and there's plenty of chat about the prospect of a cut in interest rates, but we'll talk about that in a little bit more depth next week. So shall we get going with our info in depth for this week? So My Housing Market is my brand. We work in conjunction with the good folks at Infinity to bring you these weekly housing market updates. It is all about the current state and future prospects of housing markets. And as I've already alluded to, it's particularly about the current state. We want to know what's happening here and now so we can have some reliable insights into housing market activity. So let's get started. It's the week ending Wednesday, February the 5th. Oh, geez, they're rolling already into the year. So week ending Wednesday, February the 5th. And this is what we're going to look at, as I discussed before. January home prices, December building approvals, and the latest weekly auction results. So let's have a look at the latest home prices. This is January data. And not surprisingly, given, as I discussed before, that typically we see a softer start to the year through January because it is the holiday period. But nonetheless, it does have a valuable insight for us when we look at compare it to where it was a year ago. So home prices were lower to start 2025. Most capitals recorded monthly falls for houses. Results for units, however, were more positive overall, but it didn't show up in the national unit price, because the national unit price, our national prices, are national capital city prices. They're weighted averages, so they certainly are focusing on the big markets because it's weighted according to activity levels, sales, and of course that means Sydney, Melbourne and Brisbane have the greater part of that weighting, and that means they influence that national price. Now, when we talk about units, most of the activity in units certainly comes from Melbourne and Sydney. So whatever happens in Melbourne and Sydney does reflect in that national unit price. And we'll see that when we look at the actual numbers. And look, when we look at the big picture going forward, we've started 2025. We look back in 2000, so that should be 2023 typo. You got to watch that AI, you know, it's everywhere. But 2023 and 2024, we certainly had strong prices growth. 2023 was a recovery year after those higher interest rates in 2022. 2024 consolidated the growth we had in 2023 with some good results, particularly with those big three housing markets that we described as Brisbane, Perth and Adelaide, which have been booming for the last couple of years. But what will happen in 2025? But we've certainly started off in subdued fashion. And it's not just the holiday period markets that have put downward pressure on prices. It's also that in a number of markets, we're actually reaching those affordability barriers. I mean, we've had good, strong prices growth over the last 2 years generally. And without lower interest rates or significantly higher incomes, it means that you just can't keep going to the bank and asking for another 100 grand, 200 grand to purchase a property, because they won't lend it to you. And that's one of the things that acts as a stabiliser for the Australian housing market. So it's good news. But the point is, even though people are still buying and selling out there in positive numbers, of course, they can't afford, or they can't literally afford to borrow more, because prices have reached their affordability ceiling. So, which is a good thing. It means it's the peak of the cycle in a number of markets, particularly Sydney. So in a way, it's a good time to buy, because you know that the upside for prices growth is moderating as affordability eases. And you know, we've got perhaps, who knows, we'll talk about that at another time, an interest rate cut coming, which will only act to improve affordability and refuel some of those housing markets that are peaking out at the moment. So let's have a look at the big picture. National house prices just down slightly over January. Of course, we measure this. It's a weighted average, as I described, but we measure the January quarter. So that's the 3 months of house prices, the median position there over 3 months to January, and we compare that to the 3 months to December. So it's a quarterly house price model that's calculated every month, and we roll it forward to get that underlying trend. So it gives us a really good, reliable insight into housing market trends going forward. So you can see there, we're still well above where we were a year ago in January. And the big picture is that we've actually increased over 22, still, despite that decline, we've increased over 22 of the past 24 months national home prices. So, and the last decrease was again in January last year. So it is part of that seasonal effect. And as I said, perhaps exacerbated a little bit by the fact that we're starting to peak out with prices growth, with those affordability barriers rising. So let's have a look at the numbers. Most capital cities recorded declining growth over January. The underperformer was Hobart there by 2.3%, a volatile market, smaller market there, Hobart. Darwin next, worst performer, 1.7% falling. Sydney down 0.4, Melbourne down 0.3. The top performer, we're probably a bit sick of the top performers. We're probably a bit sick of saying this, was Brisbane up 0.8%, and Perth up 0.6%. Now those numbers for this year, of course, are the same for the month, because that's the month so far this year, which of course is January, comparing it to December. So we'll move past that. So over the past year, we can see the performances of those stronger markets, Adelaide, Perth and Hobart. Look at Perth median price over the past year is still up 21.8%. Adelaide up 12.5%. Brisbane keeps on keeping on, up 13.1%. Sydney market up 5.4%. And it's really only Melbourne and Hobart, particularly with that recent fall, that are dragging the chain over the past year. Melbourne really flat still, 0.7%. As we keep saying, Melbourne appeals as an opportunist market, particularly as we have the prospect of interest rate cuts. But over the past 2 years, we really emphasised just how strong those big three markets have been. Perth median house price has actually increased by 42.8% over the past year. So if you bought a house 2 years ago in Perth, you'd certainly be smiling given those increases. Not too far behind, well, a little bit behind, but still good results there. Spectacular results in Brisbane, 28.9% over the past 2 years, and Adelaide up 24.9%. Sydney still some, good results there, up 16.3%. So the major capital cities have all recorded strong growth, with the exception of Melbourne over the past year, which is basically flatlined at 2.1% growth. And as I said, that Melbourne market, with its economy still performing reasonably well, is now, the smaller capitals, by that I mean Melbourne, Brisbane, Perth and Adelaide, are catching up with the Melbourne median. And the Sydney median is now at its widest point compared to the Melbourne median for the last 10 years. So, it certainly appeals as being an opportunist market. Units, we saw a sharper fall in units. The national unit price was down. Unit results tend to be more volatile because of the exposure to, as I said, through the weighted average model, to Sydney and Melbourne activity. So let's have a look at the breakdown. In fact, it was only Sydney and Melbourne that were negative over the month, the quarter ending January, the month ending the January quarter, with Sydney down 1.1% and Melbourne down 1.5%. Now, all the other capitals, with the exception of Darwin, which was flat, actually increased unit prices over January. So that's a pretty good result. But because of the weighted average model, it meant the national unit price was down by 0.7%. So when we again look at those annual results, again, look at the standouts, Brisbane, Adelaide and Perth. Perth units up 23.5% over the past year. Brisbane units, which has been tremendous growth model, a tremendous growth market, those Brisbane units up by 24.9% over the past year. So there's, and again, when we look at what happened over the month, Brisbane was up 1.8% over the month, which was only behind Hobart in terms of growth rates for units. And Hobart, of course, is a volatile, smaller market, and Brisbane is by no means a small unit market. And that Brisbane market Brisbane unit market just keeps on keeping on. No sign of slowing down at all. And over the past 2 years, Brisbane units have increased by 43.7%. So those that took notice unwisely about all the doomsayers a couple of years ago saying the Brisbane market was oversupplied and it would be a wasteland for years, gee whiz, they'd be kicking themselves, given those that did buy over the last couple of years have certainly gained some very significant capital growth in that Brisbane market. So pretty good news there for units overall, but of course not everybody's chugging along. We saw Melbourne and Sydney down. Again, that's a bit to do with the seasonal impacts of January, as we saw with housing. But those big three keep on keeping on. By that I mean Adelaide, Perth and Brisbane, as we've seen for most of the past couple of years. All right, if you want to get a copy of that, the latest December, that should be the January house and unit report, you can get a QR code from that. You can get a PDF copy from that QR code. So that's house prices and unit prices for January. And let's have a look now at what happened with building approvals over December. We haven't got the January stuff out yet, but home building approvals were up for a fall over December, following a 5.3% November fall. As we say all the time when we're talking about building approvals, they're very volatile because unit developments come and go in large numbers from month to month. So that can push up the overall building approval numbers for total homes accordingly. Units were up 15.2%. And as I said, we get volatile ups and downs with units. But it was interesting that houses were down again. So this is a couple of months we've seen building approvals for houses falling. So houses have been the bright light for building approvals, home building approvals over the last year or so. Just starting to look like they're tapering off. Of course, this is seasonally adjusted, so it's nothing to do with the end of the year. But as I said, they have been a positive force in building approvals for houses, but just starting to show a little bit of fatigue, perhaps. New South Wales was the top state, total homes up by 19.1%, courtesy of some big developments coming into Sydney, big unit developments coming into Sydney over the month. Annual growth levels still remain depressed. We'll have a look at that shortly. But the quarterly trend is still low, but we're starting to see a rise in the trend. So, maybe we can start thinking about being able to, think about anyway, matching supply with demand in terms of the Australian housing market. So this is the data. You can see there, houses down 3%, units up 15.2%, overall up 3.8%. When we look to the year to date, this shows us and of course it's the same as the full year because it is December. Houses have improved by 6.8%, building approvals for houses, but units are still dragging the chain down by 2.6%. So it's been all about houses over the last year being approved for building. Units still just trundling along, although even with units we're seeing a little bit of an improvement in the trend. So that's the big picture trend there. This is national home building approvals, and this is the quarterly trend. You can see it just starting to tick up a little bit, and over the longer term, just starting to look like there's a bit of heat coming into the trend. Still well below where it was at its peak levels there, which were exacerbated by the previous government's home builder policy. And we're also tracking higher than where we were a year ago in terms of the monthly numbers. So, but just a quick note, if we multiply that monthly number of 14,000 by 12, we get about 170,000. Now, the government has said that we were going to build 5 million homes over 6 years, and that was going to be 200,000 homes plus a year building. Now, these are approvals, and we're tracking it at just around about 170,000 on a better, in a better market environment for outcomes. So we're still well short of the target the government set for those 200,000 plus homes a year to be built. And these are just approvals, remember, and we typically see approvals around about 90% of approvals turn into actual completions. So still some work to do, but at least we can say there's a bit of a light at the end of the tunnel at the moment with the latest data. And you can see there when we look at the trends for houses and units just starting to pick up again. You can see that volatile up and down trend for the darker series there for units, the lower series, but just starting to lift up a bit in terms of the trend for units. But look at houses, they're just starting to fall down a little bit. So we're sort of moving with the latest data a little bit two ways. Unit trend picking up, the house trend, which has been, as I said, the star performer by comparison over the past 12 months, is now starting to weaken off a little bit. So we need to keep an eye on that one. Melbourne remains the powerhouse for home building as usual. This is the last year's activity for building approvals. I think the interesting thing to look at there is the Perth data, where Perth is now approving just second only to Melbourne in terms of building approvals for houses. And it's more than Sydney, significantly more than Sydney. So a real building boom happening for houses in Perth and for units in a relative sense. And no surprise given, as we discussed before, just how strong that Perth housing market has been. Plenty of demand, and that's triggering a lot of supply in that Perth market. So, but again, Melbourne leads the pack in terms of overall building approvals for homes. And when we look at the breakdown over the year versus the previous year, we can see there Sydney actually has been a real underperformer. Overall homes are down overall homes are down 6.5%, units down 9.5%, and houses down 2.5%. And it's only really Brisbane which has had a decline in unit development. And that's, again, looking at how strong that unit market is in Brisbane. When there's fewer units coming through, means only with that high demand that prices will continue to grow in all likelihood in that Brisbane market. But you can see how Perth has really skyrocketed in terms of activity over the past year for building approvals, home building approvals. This is the long-term trend for capital city building approvals, still down 35.2% since that peak way back in 2016, 10 years ago. But the trends are now starting to lift overall, which is good, but still well behind where it was at its peak. And when we look at the breakdowns, again, we're just starting to see with the capital city trends that houses are just starting to ease a little bit. Building approval trends for houses and units are just starting to pick up from a very low base. So some interesting changes there that are becoming apparent with the latest data on home building approvals. We do remain undersupplied. We have had a lift in house building over the past 12 months, and that's picked up that trend. And we've continued to see until recently a decline in building approvals for units. But hey, it's now starting to pick up. So we're going the other way. It's interesting to see how that pans out for the rest of the year. But we certainly still need a lot more homes, units and houses to satisfy a lot of unmet demand and to take pressure off rents and prices in our housing markets, or certainly allow more participants in our housing markets with more supply. All right, so let's have a look at the latest weekly auction results for the first time in 2025. So we had this week's been the first week where we've had enough numbers to get a reasonable feel for what's happening in the market. These are the full weekly results to Saturday, February the 1st. I think there were some pretty good results, actually, in terms of clearance rates and the number of listings. There was some who were saying that listings, because they were down a little bit on the beginning of last year, that was a sign. But last year we had an absolute boom in listings as sellers just rushed into the marketplace. So we're getting a bit more of a rational number of listings coming in for auctions. And it was also, this year has started a couple of days earlier than last year. So at the margin, it probably doesn't mean much, but it may mean something. But this will be revealed in coming weeks. And I do expect listing numbers to be slightly lower than last year at the comparable time, because we had record numbers of auctions coming into the marketplace last year as sellers rediscovered the market and their confidence. And that's the reason for that. So it's more important, in a sense, to look at what the clearance rates were. And they were pretty good, let me tell you, for this early in the year. And I think they're setting up the markets for another year of growth. It shows demand is still there. And of course, that will be enhanced if we do get an official interest rate cut anytime soon, sooner rather than later. But that's a discussion for another time. So these are the results. 479 auctions in Sydney. Good clearance rate there, 72.6%. That's certainly in favour of sellers. Over 7 out of 10 properties selling under the hammer. Higher than the week before, which was, still a January result. Sorry, that's the results over the last week of last year. And higher than where we finished off last year. We started off in a positive frame. And not too far away from the auction clearance rate over the same weekend last year. 72.6 in Sydney, good result. Melbourne, and auction numbers down around about 30 odd over the years. But, as I said, that was a big beginning to the year last year. Melbourne, 476, similar auction numbers, a little bit higher. Good clearance rate there for Melbourne, 74.3%. In fact, it's the highest clearance rate in Melbourne for quite some time. So are we starting to see Melbourne buyers discovering the market? But 74.3%. Which was the highest of all the capitals last weekend and the highest in Melbourne for quite some time, is a very positive result to start the year, and certainly well ahead of where they finished the year. Melbourne finished the year last year and ahead of where it was at the same time last year. Brisbane, a bit of the same old in Brisbane, 50% clearance rate, similar to where it was a year ago, but higher than where it finished finished the season last year, where it really sort of ran out of puff Brisbane over the last month of last year. But we typically see lower clearance rates in Brisbane because it has a different marketing attitude towards auctions as a marketing strategy. Adelaide, 71.5%, a good result there. And Canberra also a good result, over 60%, which is its best result for some time as well. So, hey, it's a good start to the year. It is early days. We've got a way to go. And this is why we bring this to you every week, so we can develop the narrative as the weeks go by, just to understand how our housing markets are travelling. But I think this is a pretty good start in anyone's language to the year, early days. There's the trends. You can see there that trend for Sydney, weekly auction results, higher than for some time. It is only 1 week, so we need more weeks to get the full month up, but certainly a positive start. Similarly for Melbourne, good result there, over 70 for Melbourne. Hasn't seen many of them over the past year or so. Let's see if it can be consolidated over coming weeks. Similar story for Brisbane. We're saying the same thing for all the capitals here. Brisbane just a little bit below where it was for February last year, and very similar results there for the Adelaide market, and a good result there for Canberra, which I think, along with Melbourne, is a bit of an opportunist market as well. So I think some good positive news there to start the year in our auction markets. We'll look at it again next week just to see whether it's consolidated. And if you're looking for those latest auction results, you can get the latest weekly results on my LinkedIn channel, Doc Andrew Wilson at LinkedIn at 6 o'clock on Saturdays, and the full national report with the capital city regional breakdowns and the top 10 sales under the hammer for the week. That's released on my LinkedIn site around about 9 o'clock Sunday morning. If you want a copy of the latest auction market report, there is a QR code which will give you a PDF link to that latest report. So we finished all the data for what's been a really good week this week in terms of having some specific insights, I guess, stronger insights into the housing market. We'll continue to bring you that. But if you're looking at suburb level data, we can bring you that here with Infinity and My Housing Market. We have a suburb data app which you're welcome to access. You have to get a password, however, to get into that, and that password is available through the good folks at Infinity, but it's well worth getting hold of. Here's a screenshot. It gives you all the current asking prices and asking rents for each suburb in Australia that has data. All the suburbs are covered that have data, and you can filter it for a number of factors. Here we've got price or rent. You can filter it for the state capital city region or the outside capital city region. Here we've filtered it for the New South Wales Sydney capital region. All the suburbs, Blacktown there we're looking at. We can filter for house unit or townhouse and the number of beds. And this is the result we've got here for Blacktown. Not just the median price, but we can show you the low and the high price. That shows you the range that sellers are asking for their properties right here and right now, and also the number of properties that are for sale. So we also do exactly the same thing for rents. So good one for investors, good one for tenants. And we've also added something great for investors on our app, and that is you can now look at where the top 10 yields on each of those regional breakdowns are. And there's the top 10 for Sydney for 1-bedroom units. These are the yields. So this is return on investment, gross return on investment, based on asking prices and asking rents. It also shows you the number of properties that are for sale and the numbers of properties that are for rent, also the current vacancy rate. So how good is that? And that's all the information you need, probably. Anyway, a lot of it to start making your decisions or validating your decisions in terms of property investment. So next week, we're going to look at the January home rents, the December quarter home loans. It used to be a monthly series from the ABS, the home loan data. It's now quarterly. We'll have a look at that to see most particularly what the breakdowns in buyer types are doing, where the strength is in terms of first home buyers, investors or owner occupiers. And as usual, the latest weekly auction results. So I really look forward to that next week. Lots more information. Will the auction results continue to stand up? and what's the rental market doing at the moment, which has been looking a little softer of late, and we'll just see if that's going to continue into this year with those January home rents. So if you want a copy of the report, there is a QR code. You can take a scan of that on your cameras, and I'll give you a PDF copy, a link to a PDF copy. So thanks very much, everybody, for your attention again today. Another episode of the Wilson Weekly in conjunction with Infinity goes by. And here we are well and truly into the 2025 housing market. And believe me, all the chat over the next couple of weeks will be about, will interest rates be cut?
Wilson. $1 million question, mate.
Yes. It's a rhetorical question, anyway. All good, and we'll catch you next week.
Awesome. Thanks, Doc. Appreciate that, mate. And we'll see you next week. Thanks for your time.
Thanks, Brenton. Thanks.